somebody said the other day, the average number of homes, not average number of offers on a house has dropped. It dropped from 5 to 4 in the last month. There's plenty of us on the call that worked many, many years just to get one offer on a house. So let's be honest. Still a very, very good market.
Hey everybody, it's Johhny Mo. How are you? Calling in today from Madison, Wisconsin. Beautiful. And I'm here with my buddy, the esteemed David Childers from Keeping Current Matters. David, how are you? I haven't seen you for a while.
I know it's been, I was looking back on our notes. We did this about a month ago, and I missed a couple of weeks ago. We were traveling, but it's good to be back. Beautiful there behind you in Madison. So excited to have this conversation today.
I will take it. What are we talking about today? The mortgage crash, the real estate crash, all these other crashes that aren't happening?
Let's talk about let's maybe go free flow, Johhny. I'll tell you what we're getting at KCM question wise. Probably one of the biggest questions right now is, are we seeing a slowdown in real estate? People are kind of asking that, is that happening? So we can talk about that. I always, one of the questions that comes up is, hey, with the eviction moratorium being lifted, what's going to happen there? Are we going to see a bunch of foreclosures? There's a lot of drama, so to speak, in the media. We're seeing, at a national level that be lifted, local levels go, hey, we're going to stop this. Institutional investors in the real estate business, what are they up to? The big funds that are buying things. But tell me what you're hearing, and we can talk about a lot of things.
So the stuff that I'm seeing out there is, lumber prices have come down a little bit. There's been a little bit of release in the lumber prices. Rates are still staying relatively historically great. Yeah. And I see some markets where they say it's starting to slow down, but most of the markets I see, it's still strong, right? Yeah. So I think it depends on where you are. I was just in Nashville, and every real estate agent that I talked to, I did a presentation in front of 400 people. Whole bunch of hands came up when I said, how many people in here this year have sold a house to somebody from California? All their hands went up. So I think it depends on where you are on what you're going to see. But all in all, I see it still being very, very strong.
Yeah, let's talk about that. So you're right. Lumber prices are coming down. I think the question is still out: is that being passed on to the consumer right now? What's the status there? 2, the average 30-year fixed right now, as of yesterday, is 2.77%. Wow. So still very, very good. I think the low that we saw last year was around 2.6 something. So we're knocking on the door of that. And a lot of that is, some fears right now in the market about COVID and what's to come. That's the driver of that. But even this morning, we're seeing, jobs report, a lot of jobs coming back in. So expect that to be a counter to that. The big question right now in the mortgage business is, will the Fed start to pull back in their purchasing in the bond market? That's what's been pinning rates low for so long. So a lot of questions out there, but let's hop into that question of, is the market slowing down? You mentioned Nashville. It seems like we're in Richmond, Virginia. I know you're up north right now and living outside the Boston area. Seems like everybody's trying to move to Nashville, from what I hear, in a lot of places, a very, very hot market. But let's talk about what's being said out there, and let's talk about the reality, because that's what we try to always do, Johhny, Keeping Current Matters, is give you the facts, give you the data, so that you can be the knowledge broker on these topics. So I'm going to start in a couple different places, but let me frame it this way. I found an interesting quote. It says, when you have a void of information, emotion tends to drive decision making. And gosh, we could spend the next half an hour on this, Johhny, and talk about this as a topic. But right now, there are a lot of people talking about, is the market slowing down? And if they don't have the correct information, may let emotion drive that decision making. And oh, by the way, we're seeing the housing boom is officially over. I clipped this out of a headline this past week. Home sales drop, pending home sales, so we're seeing it out there, and I want to bring a little bit of context to it, okay? Let's start with buyers. We've been talking about this. I think last time we were together, we talked a little bit about this, but this is a look at the second quarter NAR buyer traffic maps. And so if you look at this, going up the top left-hand corner, that's April, then May, then June, as you go around clockwise there. And what do we see? strong buyer traffic in April. That's that dark blue color. And then we see this less strong, lighter blue color a little bit in April, a little bit more in May, and a lot more in June. So we are definitely seeing a shift there in buyer traffic as measured nationally. And now that's going to depend, like you said, depending on where you're at, maybe a different story, but that's what the national picture is. Let me preface it this way. If we go back to Showingtime and look at their index, we're seeing the same decline in showings. But oh, by the way, that yellow line across the screen, Johhny, we're ahead of where we were last summer.
Okay.
So it's all about perspective. Remember, we went through the lockdown, we crammed a ton of business into last summer. Everybody was busy, everybody wanted to buy a home. And where we stand today is ahead of where we were at that time, and maybe a little bit of decrease coming out in the next report. Maybe we're even with where we were last time. So I always, when I bring these updates, I want to bring it with perspective. Yeah, a little bit of slowdown, but this is the old analogy that you're flying down the highway at 95 miles an hour and you see a cop up on the hill and you slow down to 65 or 70. You're still doing the speed limit or just over the speed limit, but you feel like you've slowed down considerably.
Yeah, for sure. And that's the thing, right? Some of it is inventory. So there's just not as many opportunities. Some people may be holding off, but it still looks strong to me. And again, it depends on where you are in the country, but it's still a lot of dark blue up there, right? It's still a lot of dark blue.
It's all about perspective, right? It's all about perspective. You know, somebody said the other day, you know, the average number of homes, not average number of offers on a house has dropped. It dropped from 5 to 4 in the last month. There's plenty of us on the call that worked many years just to get one offer on a house, you know, so let's be honest. It's still a very good market.
It is. And, you know, when you look at, you know, one thing that we never really talk about is the absorption rate and things like that. The absorption rate is still short. It's very short. When you start getting into 3, 4, 5, 6 months worth of inventory, you really start to have another switch. So when people are like, my God, I can't believe it took a week to sell this house, that's still an indicator of a very strong real estate market. When you're getting 4 offers instead of 5, it's still a very good indicator of a seller's market.
Absolutely. You know, all through the summer, over half of the offers on a home that sold have been above list price. I mean, so dramatic things we haven't ever seen before, right? I mean, it used to be, hey, you were at the top of your market if you were getting 97, 98% of list price. Now we're dealing with such, you know, different dynamics that, you know, we see a little bit of slow in that. We think, oh my gosh, what's happening? Let's preface it with that perspective.
For sure. And man, I tell you what, Tennessee's crazy. They're all selling and they're all moving there, right?
So let's talk about sellers. That's an interesting piece. You know, we talked about this last time about the equity in homes and how that's grown with price appreciation. And I'll give you a little hint. We're seeing kind of the inverse with sellers in some of these traffic maps. I'll show you the same traffic map that I showed before. Here for sellers, April, May, June, just like what we talked about the second quarter here. And again, it's the inverse. It's the gray is going to be very weak. You know, the dark gray is very weak and light gray is weak seller traffic. We go back to the spring and what do we know we need? More sellers. And as we've gone through the months over the summer, we've seen more sellers indicated by that light and dark blue, you know, color on the maps come forward. And again, I always say this is the I can sell my home for what kind of effect. People saying, you know what, our home is appreciated. We want to do something. We want to, you know, move into the home of our dreams. And we're seeing that in monthly listing counts. Okay. So as we look at that and we start to kind of compare, all right, what's happening with buyers, what's happening with sellers, we talked about on the front end, we're seeing historically low interest rates still today. Here's the bottom line. If you want to look at the overall health of the market, I'll say is this. National Association of Home Builders does a lot of studies. The share of prospective buyers who are actively searching for a home is greater in every part of the country as compared to pre-COVID 2019, fourth quarter of 2019. So dramatic activity out there, although it may be off these extreme highs that we saw in the spring and, even into last year. So I just would, to everybody who's watching, and as always, add any questions you have in here. I'll try to take a look at the chat. Maybe even for us in the business, be aware of that, be aware of what that activity means, but also be aware that the clients you serve are getting inundated in the media that the boom is over, these things are happening, and being able to accurately give them what's happening is going to be important.
Sure. And if you bought Microsoft at $34 and it got up to $84 and you sold it at $74, you still made a great profit.
Right.
Right. So, we might have seen the peak of a blip, and there's going to be some leveling out because it looked like there's more inventory coming. Look, especially on the West Coast markets, Texas, I saw in June, they all turned blue and such. Now, what about what people I see people talking about the shadow inventory, and that there's still shadow inventory from the 08 or whatever. But let's talk about the forbearance. Do we have any updates on forbearance? Because I see a lot of misinformation out there about forbearance. Do we have any updates on, what are you guys seeing in that area?
Yeah, I want to give you an update on that. I want to answer a question. Roger asked, isn't comparing a year ago an unusual time frame? So a year ago is actually 2019. So what I'm comparing is where we are today to pre-COVID. What we know happened in COVID is we shut down, and then we piled a ton of business into the summer of last year, and then we've come through this year. So just giving people perspective where we stand today as compared to last year. So let me give you that update, Johhny, on this shadow inventory question. Are we about to see a wave of foreclosures coming in? We've kept on top of that at Keeping Current Matters, Johhny. We've talked about it for the last month. Last year that we've been doing this. And it's a question that's coming up. There are a lot of headlines right now about eviction moratorium being lifted. So federally, the eviction moratorium has been lifted. You're seeing a lot of states, a lot of counties, a lot of towns say, hey, we're going to keep that in place for a period of time, or we're going to do something else. Remember this always, that when they talk about eviction moratorium in the news, that's largely slanted to renters. Okay, we're going to cover the housing market piece. I don't want to diminish the fact that's a crisis, that's those folks are in some need of help. But I want to preface the comments that I'm going to make towards the housing market. Now, if you're a landlord out there and you own single family homes and they're renters, then you've got issues there too. I realize that many landlords being squeezed right now in that. But if we look at that from the housing market, I'll give you a little bit of perspective of where we stand as of just, the last week, according to MBA. Start always with this slide. Experts said it was going to be 30%. It peaked out at 8.5%, and we're at 3.5% of mortgages in forbearance right now.
That's crazy.
That represents 1.9 million homes in this country. Okay, it's been falling for the last year, and folks will continue to come off as we go throughout the year. Now, question everybody always asks is, okay, what's happening as they come off? And that's always the shocker, because 44% right now that have come out since this program started have been paid in full, almost 1 in 2. They didn't need it. They took it as a precaution, and now they're whole. 39%, you see it there in the blue area, 38.7%, I'm going to call that 39%, went through a workout with their bank. They tacked it on the end. They did a refinance. They modified the loan, whatever the case may be. And they didn't need it. Close to 4 out of 5 people that have come out of forbearance are in good shape.
Yeah.
That is not something when you turn on the TV tonight, you're going to hear. You're not going to hear the great news about the housing market is people are coming out. What you're going to hear is all these people that can't pay their mortgage and rent payments.
Or dirty water sells.
Totally. Yeah. Trying to suck you in with that headline. Now, there are still folks in trouble, and I'm not minimizing that. 17% of those coming out have been in trouble. Now, what's happened with this is the green section of the pie's constricted a little bit over the last year. The blue section has grown a little bit larger, and the red sections remain relatively the same size. What'll happen over the next few months, I believe, is the blue section will become the predominant section. I think banks are very eager to help people work out this situation. They don't want to take the home back. They don't want to do what they did, in 2008 all over again. And for those that are in trouble, experts have pegged that at 200,000 to 300,000 households across the country. Now, the important thing to remember there is Black Knight released a study. I may have mentioned it last time we were together. 96% of people in active forbearance have at least 10% equity. They can sell their home. I mean, homes have appreciated.
And that's the thing, right? When they went into this forbearance thing, we're talking about March, April, May of last year, 2020. The market has appreciated since then.
We saw 10% appreciation last year and going to see it again this year.
Yeah. So while they might be in a situation with their monthly payment, they can be made whole and probably come out of it with a profit by selling.
Yeah, absolutely. They put a little money in their pocket and hopefully, take care of the crisis they're in for them and their family. Now, to put that number into perspective, 200,000 to 300,000 homes. If you go back to 2006 to 2014, 9.3 million households went through foreclosure back then.
Wow.
So just if you want to give perspective to the client that you're serving about the situation, this is the way to do it, because many people might be sitting on the sidelines, Johhny, thinking, I'm going to hold off and, wait till all these foreclosures come and then I'm going to scoop them up and get a good deal. And that's our game plan. I don't think that train's coming. So that's
I don't think so either.
And you're
I see a lot of, go ahead. Sorry.
No, I'm saying you're seeing that being talked about in many, many places, but I still think there are people that believe that, hey, this doesn't sound good,
I'm seeing more institutional buyers out there buy up these things. My 18 unit that I'm partners in, I mean, we bought that for $750. People are offering 2.3, right? Yeah. And they're going to buy it. They're going to hold on to it. So there's a lot of institutional money, hedge fund money, and those types of things that are being interjected in all markets around. It used to just be like Florida or Arizona or these other hot areas, but I'm seeing that coming into New Hampshire and Michigan and these other areas where people with money, institutional type money, are buying these properties up. So I don't think, and when I say these properties, it's all properties, right? Investment properties, because there's some land usage changes that are, being worked through and everything like that you're going to want to get. These people see the writing on the wall. They want their big commercial type properties, their investment properties, because that's what's going to basically keep them secure through any kind of awkward situation or crash, because a hard asset is always better than that volatile monetary asset, I believe.
Well, let's talk about that. I've got a little bit of an update, and I want to clarify some things that are happening with institutional money and give you, I always say it's not good news or bad news. It's just the news of what's happening. We got to be educated on there. A couple of things that I would say right now, institutional money, meaning these big hedge funds, the ones you're talking about, Johhny, know what we know. And that's that real estate is a good investment right now. So you're seeing money flow in. There was a headline a few weeks back, BlackRock's invested $6 billion into housing. Now, it's important to understand that was for an acquisition. You can go back and read about that. That was not to buy new construction. But let's go back and look, because Adam Data just released a report on this, and I want to give you a little perspective on it. So Adam Data came out. Institutional investment shoots up to nearly 6-year high. Institutional investors nationwide accounted for 4.6% of all single-family housing condo purchases in the second quarter of 2021, the highest level since the fourth quarter of 2015. That's gotten a lot of attention, and it should. Let's go back and let's look at a couple of things and just clarify what's happening with institutional investors. This is a look from Adam Data going all the way back for the last 20 years, 2001, of the percentage of single-family homes purchased by institutional investors. Oh, by the way, there's an asterisk on institutional investors. Here's why. In this report, Adam Data considers an institutional investor anyone that owns 10 or more properties. Okay. I wouldn't consider that an institutional investor. And I would say, how many people, on this call in LabCoat, and that we know, Johhny, would be considered institutional investors? A lot of them. Okay, yeah. So keep that in mind as you look at this ATTOM data report, or you hear about it, because no doubt, you see the red arrow there. We've seen a spike in those purchases, and you want to keep that in mind. There's a lot of things that are in that. iBuyers in that. Again, 10 or more properties plus the big organizations. But if you draw a line to where we are right now as compared to the last 20 years, you kind of see how it shakes down or shakes up in where we stand. Not in a tremendous spike. There were 10 years in this country that institutional investors really, really dominated above where we're at right now. So we're going to continue to watch it. Keeping Current matters. It's not a situation where institutional money is coming in and taking all the listings out of the market. There are a few interesting things, though, in a couple of other reports that I want to bring up. Yardi Matrix, which studies the institutional rental market, says this: single-family rentals have long been a major subsection of the housing market, representing about 1/3 of the 46 million rental homes in the U.S. When they refer to rental homes, that's apartments, that's single family, that's the whole deal. They go on to say, however, 98% of single family rentals are operated by mom and pop owners. Those are folks that are investors that are out there doing it. That's the overwhelming majority of the market. Institutions did not enter the segment until after the global financial crisis in 2008 and have remained a small slice of the market. So that's when you break down the data, that's what it looks like. Now, I want to give you one other very interesting fact that is coming true post-COVID out of this report as well. They say the institutional-owned single-family rental market has been rejuvenated by COVID. The revival comes with a new twist: the build-to-rent segment, in which home builders develop single-family homes to rent. Some 12% of new single-family construction this year is being done for rentals. Very, very interesting as we look at the new construction market. 12% of that being done in these neighborhoods that are rent to own across the country. So that's kind of the breakdown of the institutional investor and what that, what's happening across the country.
And Yardi is, as far as I'm concerned, Yardi is one of the top data aggregators and informational sources in the industry. They have their hands tied into a lot of different things. And that's what I love about you and your company is you make it easy for everybody. You go research this stuff. You pull the research and you bring it to us, the agents, the brokers, the industry, so we can be informed, so we can make those decisions. Because what you see on the news is it's not, I don't think it's an accurate depiction of truly what's going on. Your stuff, the people that are actually tracking the sales and tracking the new construction and the builders associations and everything, that's where you get the most accurate information. And that's what you guys get and bring forth. So I love that stuff.
Big shout out to the team here at Keeping Current Matters. 7 people that do that full time, that write it, that research it, and every report that comes out in real estate, we try to get our eyes on it and boil it down to what does this mean? And a lot of times people will say, are you economists? We're not economists. We're folks in the business that go, how do we communicate this? How do we make it simple to understand? And oftentimes what's put out as a headline to scare folks or get eyeballs or whatever is not the truth. And that's what we want to do, is get the truth out.
Yep, exactly that. We got time for one more thing if you want. What do you got?
That's what I had for today. We can I don't know if there are any questions out there, or we can whatever else we want to talk about.
Yeah, guys, if you have any questions, put them in the chat here. If you're on Facebook, you can put them in there. We don't get to them live, we'll get to them after the fact. I see the market being strong, continually being strong out there. We probably will see a little bit of inventory. Some people are starting to think, hey, we've hit the peak of the market, now it's time to sell. So I think we will see some inventory open up. We did see that in one of the slides, especially over on the West Coast and Texas and a couple other areas. I think we're going to start seeing some more inventory. Still, don't stop grinding. You got to have this information to relay it to your clients, to your prospective clients. And your area might be a little different. That doesn't mean the whole country is that way. I still think it's strong. Interest rates are low. I'm seeing people with buyer fatigue. keep chipping away at it. It's going to happen, right? It's going to happen. We saw the increase in sales coming. So, and I think with
John,
the lower
you
price,
want to talk about inventory? I'll show you a couple slides if I can find
please.
them here on my computer about what's happening with inventory. Very interesting picture across the country right now. Let me share here. I didn't have this in originally what I pulled for our conversation, but you bring up a great point. Let me show you a couple of things here. So if you look at new listings coming to market over the past 5 years, we're going to look at this pre-COVID for a few years, and then what we've seen is we start out, in January, February, we start to rise new listings. We peak sometime around May, and then we kind of tail off towards the end of the year. That's the normal thing that happens. You can see it here in 2017, 18, and 19 in the real estate business. If we lay in 2020 right here, here's what happened. We were kind of starting off on this market, and then we dropped down during the lockdown. Then it came back, but we didn't get to the levels of I'm going to call it normal listings being brought to market, because a lot of the folks said, hey, I don't want to bring everybody through my house, or now's not the time, whatever their case, whatever the situation was. Now, here's the interesting part. Here's what's happening this year. We're seeing these listing numbers rise, and we're sort of going up in a time where we would have started to peak, right? People are going on vacation in the summer, things are happening, and we're seeing more and more people, more listings come to market. I think that trend's going to continue into the summer as we start to get these numbers coming out, and then tail off in the fall somewhat. But no doubt people are saying, I can sell my home, I can get good money for it, and now is the time. I feel more comfortable, whatever the case may be, in doing that. We're seeing a different story this year with listings as you start to look at the data.
Yeah, and that's a great graph to see, because I see it trending upwards that way too. The other graphs that you have with the maps on it are showing that as well. So the market's not dead, y'all. We haven't crashed. We're not going to crash. The interest rates are good. Get out there, get your information on from Keeping Current Matters, and you can get a 14-day free trial.
Yep. Go to trykcm.com. Yep.
Go in there, get your information on. You got blogs. You can connect it to your Facebook. Right. These are all things to make you look like a knowledgeable real estate agent, which you are, and come with the facts. And it's okay to dispel what the news might be saying. You have the facts, you have the data, and you can sit down and communicate properly with people.
Yep.
trykcm.com.
That is us. Johhny,
I'm going to go
Madison,
eat lunch.
Wisconsin, there in the lake.
I'm going to enjoy it. I'm here till tomorrow. Then I'm going to Charleston. I love it down there too.
Good. Yeah.
I was in Nashville yesterday. So
all right.
Traveling life. So anyways, y'all go to trykcm.com. David, be safe out there. I will talk to you in 2 weeks. Everybody, if you need us, reach out. Peace out.
Take care. Bye.